All right, everyone. So what we're going to do first is we're just going to do a run through of the federal and state R&D tax credit programs. Now, while these credits are available in multiple states across the nation, we're just going to use Pennsylvania as our topic today, simply because trying to get into the differences in every single state would be its own endeavor. Every state is unique. So as an example, we're going to use Pennsylvania today. So give me just one moment and I am going to share my screen with you all. And then we will start doing a quick rundown of these credits. Now, bear in mind, if you have questions, we're going to do that at the end. And remember, at Bowers R&D Associates, we are specialists. We only work with R&D tax credits. So if you have any questions outside that realm in general tax areas, legally, we aren't tax professionals in that sense. So we're not going to be able to answer those questions for you. But I do see Fred Tironi on here, who is a licensed CPA. So if you do have tax questions, feel free to talk to him. All right, R&D tax credits. Brought to you by Bowers R&D Associates and from your loving federal and state governments. So just a quick introduction, Bowers R&D Associates, as I said, we are a specialty research and development tax credit team, which means that we help our clients who are developing new products and bringing new products to market. We help them get money back from the federal and state governments where applicable. As I mentioned earlier, different states all have their own rules for their tax credit programs. Some states don't even have them. Thankfully, it's not very many, but the beauty of that is that you can petition your local government to try and start an R&D tax credit program if your state doesn't have one. Just an interesting little tidbit, North Carolina, home of the research triangle. So much is happening there in terms of pharmaceutical research and the life sciences. They don't have a state tax credit program. North Carolina researchers and developers, they can only access the federal R&D tax credit, which is bizarre, in my opinion. You would think they would be all over that. I think there's other reasons, honestly, why that state doesn't have to have a program. But at the same time, I still think it's crazy. So as you can see here, this is just a quick rundown of what we're going to be discussing today. Innovation versus cost is the first thing that we're going to be tackling, followed by opportunities, where you're going to be able to see where the federal and state R&D tax credits can improve a company's chance of success. Then we're going to look into the federal program, which is available all across the nation. And as I said, there are multiple state programs, but today, just as our guinea pig, we're going to use Pennsylvania. Just to give you an idea of how different programs can be from state to state, but at the same time to show you that they are huge benefits for companies who are actually investing in innovation in their home state. All right, so this is our lovely faces. This is the crew. We are head by the illustrious Dave Bowers. And basically what we do is we are, like I said earlier, we're not tax professionals. We are R&D tax credit specialists. So think of us as the kicker on a football team. Your CPAs, your accountants, those are the linebackers. Those are the people doing the real heavy hits, right? We come out to kick. We are specialized. We know what your linebackers do essentially, but we can't do their job, and your linebackers cannot do our job. So together, we help the whole team win, and that's how we function. So if you have a great CPA and they haven't mentioned these credits to you, be kind to your CPA. They are taking a lot of body shots for you, and they are doing everything else. Like I said, we're very specialized. But if you're interested, talk to your CPA. Your CPA will, research this for you. They'll reach out to us, and that's how we all function together. So, innovation versus cost. Obviously, if you are trying to be, breaking through in the market, innovation is necessary, but the cost to do that, to get the supplies, the building space, everything that goes into building a business can honestly strangle an inventive company in their, in their infancy. So, like I said, we're using Pennsylvania as our study here for this. Philadelphia, right? That's a city that is booming with med tech, biotech, and life science companies. Like it's starting. It's not Boston just yet. I see you there, George. But Philly is starting to get into that space, and it's really exciting. However, there's a lot of startups who are coming out of these academic programs and then going, oh God, we can't afford payroll, we can't afford health insurance, we can't afford the rent, quite frankly. So that's why this state in particular has been such a good study, because you're getting to see how this credit can work to basically just save innovation in the states across, the nation. So here's when we move into the opportunities. The federal tax credit, that is a program that's permanent. It is a part of the US tax code. In 2015, President Obama signed this into law. And with just this credit alone, companies can recoup 7 to 10% of their, it's called qualified research expenditures, QRE, or your R&D investment, as you see on the screen. You can recoup that money. Now, the way that you do that is by completing an R&D study, going through and telling who, what, when, where, why. You have to explain what your experimentation was, who was working on it, what you spent on those programs. Now, remember, this is a federal program, so it's not going to be a complete walk in the park. It is, thankfully, one of the easiest federal programs I think I've ever seen. And my husband was in the Marine Corps, so we worked with a lot of federal programs. This one is bizarrely well designed, and it's pretty clear cut, to be quite honest. So the next thing that you see here is a little less clear cut. It is the state credit, Pennsylvania R&D tax credit right there. This is kind of funny to me because the states are honestly the harder program to take advantage of. That's because they have companies actually apply. Your federal tax credit, it works like a coupon. You fill out a form, you submit your form at tax time, and you get you get your reduction immediately as soon as you use it. The Pennsylvania one, like I said, and all of the other states, there's an actual application process. So when we work with clients, we work top down. We help them with their federal tax credit. We pull the information that we need for their state from that initial study, and then we help them put together an application. One of the things about the Pennsylvania R&D tax credit that's really incredible and very, very unique, there's very few states that do this. They allow companies to sell their tax credit for cash. You can get about 90 cents on the dollar for this. And this is a huge benefit to startups, and even more mature companies. If you have money in the bank to pay your income taxes that year, and you're like, you know what? I want more money to put into health benefits for my employees, or to do whatever I want with it. It's your money. As soon as someone gives you that check, you can do whatever you want with it. Now this takes up a full slide because I'm sure some of you are familiar with Section 174. This is crushing a lot of startups. I mean, it's hurting a lot of people who are even more established, because basically, Section 174 completely changed the game in how people could work with their business expenses at tax time. So think before, a company could eat 100% of their business expenses when it came to tax time, right? You could write off 100% of it. It's like a big pie. Section 174 comes into being in 2022. It was written in 2017, enacted in 2022. Everyone thought it was terrible. And they all thought it was going to be rewritten. And then COVID happened. So, they kind of forgot about it. And now we're all dealing with it. And we're going to be dealing with it for a while. There's constantly talks about rewriting this. But you've seen Washington, so don't get your hopes up. Now, what this means is, like I said before, you could eat 100% of your business expenses. So let's say you had, we're going to use the pie metaphor, right? You had a pie that was $100,000. You could eat all of it. $100,000 in R&D costs could be written off. So let's say your income was $100,000 and you had $100,000 in R&D, you pay $0 in taxes. Section 174 states that you have to amortize these business R&D expenses with 20% over 5 years. So now you are only able to eat $20,000 of that pie. So let's say you still had those original numbers. You've had an income of $100,000. Your R&D expenses were $100,000. You now may only eat 20% of that pie. So you are left with a tax bill of $80,000. So this in particular is a huge gut punch to any company that's got an SBIR grant, for example. So every life science startup, manufacturing startups, everybody who is taking advantage of grants who didn't know about this change really got slapped in the face. I did a talk once for Women in Bio, I believe, and I had some poor woman say, we just got a $400,000 SBIR grant. Are we going to have to pay taxes on that? And I said, ma'am, I'm so sorry. Yeah, you're not going to be able to write it all off. You're going to have to do this. And yeah, it was not great because they don't have any money. They were a literal startup. So what's great though about the tax credits, they combat this directly. Your federal and state R&D tax credits can be used to reduce your business income taxes. So if you are a company that suddenly found themselves profitable because of Section 174, you need to get these credits because you can use that to reduce your tax bill. And we're going to get a little bit more into the credits and how they work right now for you. So as I said, this company, excuse me, I need more coffee. This tax credit is eligible for startups, for mature companies. It's even open to foreign companies that come and open a location in the US. Now, of course, it has to be a location that's doing R&D for them, but this credit is made to bolster the US economy. So if people bring business into the US, that's totally fine. That's what we want, right? We want more money floating around in the US. So as you can see here, the federal R&D tax credit can be used to offset income taxes if you're in a taxable position, like we just mentioned. Alternative minimum tax if you have less than $50 million in average revenue for the 3 preceding years and you owe AMT in the current year. Now, this is a really exciting piece, especially for our startups. Employer portion of payroll taxes up to $250,000 each year if you're a qualified small business. That's really exciting. Payroll can get expensive. And with a federal tax credit, you can take that stress and wipe it clean with that one. What's also exciting about the federal tax credit is that there's a 3-year look back. So let's say you've started investing in R&D in 2021. We're now in year 2024. You can look back and say, oh, you know what? I didn't get to claim a credit in 2021, 2022, or 2023. I would like to do that. This is where we really work with your CPA, because your CPA is going to be the one who would go back and amend your taxes and do all of that heavy lifting. But we could go work with that individual, go through all the documents from those prior years and get studies done so you could claim tax credits and get more money back. To figure out if you qualify for a federal R&D tax credit is really, really simple. Like I said earlier, the federal R&D tax credit program is bizarrely accessible and well designed. So there's 4 questions, as you can see on the screen. These are the only 4 questions you pretty much have to answer to see if you qualify. So the first one is permitted purpose. Very simple. Are you developing or improving products, process, formula, or software? As you can tell, this is very broad. This works for companies across the board. Agriculture, manufacturing, life sciences, as I mentioned, robotics, people who are designing Coffee roasters. We actually have a coffee roaster client on our books. We have companies who create new cosmetics. This is really for anyone who is investing money in creating a new product. The next question that you have to pass is it technological in nature? Is your work within physical, biological sciences, engineering, or computer sciences? That computer sciences is important because software development, AI, that's a huge new field, and they are all eligible for R&D tax credits. Software can get a little interesting because a lot of our software companies in the US will hire overseas. Anyone that's overseas doesn't count for certain computations for the credit, and we'll get into that a little bit more later, but that's a really interesting thing that we've seen popping up. But I'm kind of hoping that when we get the word out about this, that we'll see more coders in the US, more development in the US, which would be really exciting personally. All right, so question number 3, elimination of uncertainty. Are you asking questions like, can we develop it, or how do we develop it? This is what it means. It basically has to be an experiment. It cannot be your grandma's cookie recipe that you're making over and over again and then just simply sprinkling like more cardamom into it. This has to be something new. This has to be you've taken grandma's cookie recipe and you're figuring out how to make it vegan and how to store it on the shop shelves. It's going to be a completely new beast by the time you're done with it. The last question, process of elimination. Are you systematically evaluating one or more alternatives? Essentially, the requirements that you would have to do for a high school science fair experiment have to be able to be applied here. This is basically it. If you've done a high school science fair experiment, this is all, it's the same requirements. Is there a hypothesis? Did you test it? Did it work or not? The beauty of this credit is that if you go into a project and it doesn't work, that's fine. You can still get money back for the project that did not make it to the shelves. And maybe you took that project and you used it as the jumping off board for the next successful one, but you can still get money back. This is about rewarding experimentation and innovation. The projects don't have to work, which I think a lot of people are shocked by when they hear that. This is really to support, R&D, and R&D requires failure at times. So you're not penalized for that, which is really exciting. Okay, so now we're going to move into our sample state credit. We're going to talk about Pennsylvania today. And as you can see, we make a note here that the state credit can infuse growing companies with capital, which it really can. It's a great credit. So like I said, states have an application deadline. Every state does. They're all going to be different. That's the other fun thing. So what's nice about working with tax credit specialists is that at this point, we're starting to memorize different states' rules because we're nuts. But you can, if you have a question about your state or anything at all, just call us. We have a massive book with all of the little notes and details in my office on every state's R&D tax credit program. So for Pennsylvania in particular, you have to apply, get your application in by the 1st of December. Then they take months to review every application, and you won't see your credit until the following May, which is fine, but whatever. It takes a little time. They probably could find, someone should build them an AI system so they can speed up the process, but we'll get there, right? So as I said, it's an application. Now, what's interesting with Pennsylvania is that you have to have a filled out Form 6765. That's the form that you use for your federal R&D tax credit study. What's funny, though, is that Pennsylvania, while they require you to send in a submitted form, you don't have to actually apply for the federal credit. They just want to see that you would qualify for the federal credit. I don't know why you would do that and not take both, but some people have done it, which is kind of funny. And then for usage, this is where the state is interesting because it is really unique in this regard. So once the credit reward is made, a company has 3 options. You can use it dollar for dollar to reduce the state income tax that's due. You can sell your credit, as I mentioned, or you can sort of mix and match. You can use as much of the credit as you need and sell the rest. It's flexible. It's a direct influx of cash. The PA credit is very, very nice, and it's open to a broader range of industries and company sizes. Some states will only work with C Corps and very specific industries. Some won't allow you to be working with like educational backers, like universities, things like that. Arizona is actually one of the few companies on the books that has this open to like educational research areas. So that's pretty interesting. There's some unique little blends all across the states, which is pretty cool. So these numbers here, this is why you want these credits. And these credits alone are just the federal one. But what's good to know is that these are just 3 of our Pennsylvania clients. So they got more money on top of the numbers that you're seeing. A range of industries. We've got life science, robotics, biotech, and actually, I apologize. The first client that you see up there, life science, the client developing, the growing pharmaceutical company, that individual is not from Pennsylvania. That's an Alabama client. Alabama, down south, very small staff, like I said, less than 20 staff members, and they still got $60,000, which for a growing company, it's a good amount of money. I mean, any amount of money that you can, reduce your tax payment is a good amount of money. But as you can see, there are some large dollar amounts here. The robotics client in particular, you can bet your bottom dollar that they got a very nice PA credit on top of their $254,000 from the feds. The biotech as well, also from PA, and that was a very exciting year for them. So these credits are nothing to be sneezed at. It's actually a relatively simple process. An R&D study takes only about, if you're quick, it can take like 2 weeks for the first time around, because you need to actually be able to, upload documents, get used to the software that we use. But you do it 1 year and then you go into the next. And I've seen someone complete their study in 30 minutes and get $74,000 out of it. So these are nothing to be sneezed at. It's well worth the investment. These credits are open to a huge range of industries. And the more recent Chevron decision, if some of you have heard about that, the Supreme Court has sort of put a chink in a lot of our federal agencies' armor, so there's more room for pushback. The IRS does tend to be litigious about some of these credits if they're in the mood. But I think the Chevron decision is going to give companies a lot more leeway, or I should say, more of a fighting chance to push back if the IRS tries to take someone's credit away. But that's another reason why we have our clients do these studies. We provide a literal booklet for them. So if an overzealous auditor comes to see them someday, they literally hand them, a high school science fair experiment. They have their hypothesis, their experimentation, the details of who, what, when, where, why, so they can show their work. And that's really what the IRS wants. When they are looking through these credit forms, they want to see the work. They love to see details. So that's been a few, like Little Sandy is a famous court case. Basically, it was a company that had their credit taken away from them. It was a very large credit because they did not show enough work. So we like details, details, details when we do this. And that, my friends, is in a nutshell, R&D tax credits and how you can get money back for innovating. So I want to open, if you guys want to ask any questions, go for it. If I did a fabulous job and you have no questions, wonderful. But the floor is yours, so please feel free to fire away.
Hi, Laura.
Hi, George. How are you doing?
Good to see you.
Good to see you too.
Could you remind me and the audience how you guys get paid?
Yeah. So my company gets paid on a savings basis, basically. So when our clients get their credit, my company takes 20% of the credit when they use it. So we're trying to be, you know, not stress them out. We are trying to work with our clients to make them, basically have as smooth of a process as possible during tax time. So they can choose to hold their credit for for the federal credit, they can carry it forward up to 20 years. So we prefer if they would not do that and pay us
Mhm.
within like 2 years. But we've had that happen before where a client, they just need to take some time. They haven't decided how they want to use their credit yet. So we do their study, we complete it. Most of our clients will use their credit within the year, which is always nice. It's nice for us. And then when they do use their credit, they write us a check for 20% of what the credit was worth. So
Gotcha.
even with our cut, they're still paying dramatically less in total.
Okay. And in terms of kind of the scope, if my client said, yeah, we're interested in pursuing an R&D tax credit, in pursuing this, with Bowers, but we don't have the bandwidth, to actually go through the process. Is the kind of hand holding included in the 20% or helping kind of get to the promised land?
Oh, yeah, George. Most of my job is being like the tax credit fairy godmother and popping in being like, "Are you okay, baby? How's it going?"
Yeah.
But yes, no, and our systems, we have a wonderful back office team who are available pretty much like day or night. There's a really great software that they developed where if you are confused, you can submit a question overnight. Someone will get back to you first thing in the morning. I'm available. I can access my client studies. And if they're like, hey, I don't know what this is asking for, what kind of form do we need to get in there? Or if they've sent me some forms, I can upload them myself. So it's a collaborative process. Some of our clients, and it all depends on what our clients like. If they need more help, we'll be more hands-on with them. If they know what they're doing and they want to be left alone, we'll just kind of touch in from time to time to make sure they're okay.
Yeah.
And also to your earlier question, I said that 20%, that's just the starting number. It goes down as the credits get bigger. So we have a
I see.
sliding scale.
Yeah. So
Yeah,
the
it's
it
from
maxes
0
out
to
at 20.
$150,000. We take 20%, and then there's different strata where our percentage will drop. But yeah,
Okay.
sometimes with this, it can be like wrangling cats because everyone's, they're trying to run their own businesses. So it's super busy. They've got other things to do. So there is honestly a lot of hands-on work from our end because we don't want people to lose out on their credit. So
Yeah.
we'll touch in with them quite frequently, make sure they're doing okay and actually getting into the system. And
All
also
right.
then helping them make sure that their payroll companies actually are applying the credit. We've had issues with payroll companies just not implementing it,
Hmm.
especially the bigger ones. I had a client, he showed me what his payroll company said to him. It wasn't even an apology, honestly. They did not apply his his payroll credit, excuse me, for the entire, he got it for 2023. It was going to be applied throughout the quarters of 2023. They just never did it. They didn't turn it on. And that's literally their job. So he, reached out to us and he's like, this is what they said to me. Is there something wrong? What's going on with this? And I was like, oh no, they're just being really rude. And they said, oh yeah, we didn't do it, but we'll turn it on now. And I was like,
Yeah.
it's like, you might want to look for a different payroll company because I would be pissed. But yeah, so things like that, like even stuff that's like sort of outside, like I can't actually go fight his payroll company for him, but I'll review that stuff
Yeah.
and try and help out where we can.
I do have another question, but I'm going to let the other attendants
Yeah,
give them a.
guys, Chris, Fred, if you have anything for me, shoot. Otherwise, George, it's back to you, bud.
Laura, I put a quick question in the in the chat. What are the tax implications of selling the credits?
Oh, selling the credits. So that's actually they should be tax free.
Fred,
It's a
maybe you know
credit,
that a little
and you're
bit more
not getting the
on the
full amount.
tax
So with
side, but
Pennsylvania, for example, they only 4 states do this. So it's not no one else. God, who else lets you sell? I think think New York might let you sell your credit. But since only 4 states do this, it's not a massive deal, which is exciting. Like they don't really care. But also for the tax implications of it, it's at a loss. You're selling it at a loss because you're only going to get like 90 to 92 cents on the dollar for this. So they don't even count it as income, I believe. I think that might be tax. Let me double check that for you. Our CEO, Dave, is the licensed broker, so he handles all the sales sides on that. I can get the specifics of that for you, Chris, but I do know that you're in a favorable position when you sell it.
Laura, when you sell the credits, taxable income
Is
to
it
the
taxable,
seller.
Fred?
Yes.
That's why I love having you on the call. This is why you love your CPAs, you guys.
Mhm.
Fred,
And if I have
actually
any
does the
questions
call
with Laura,
me,
I can walk
which
next
is
door.
Fantastic. So when we have any more in-depth tax questions, we always go talk to Fred and St. John. Highly recommend the Taronis.
Chris, was that your question?
Yeah, and because you're selling it at 90 cents on the dollar, like, do you get a tax loss for the differentiation between the 100 and the 90? Like all those little pieces, would that count as a tax loss that you can carry forward?
I think you gotta see if there's a cost basis to it. If there's an actual expense to it, yes. But if it's usually you're just getting a check for $90,000, just say I want 100,000, you're getting a check for 90. If there's costs associated with it, like you paid a broker or something like that, yes, you get those $10,000 worth of deductions. But it's basically all income to you.
Thank you.
It's
And
a
how
good
far-
problem. It really is a good problem.
Yeah, it's a good problem to have. I mean, especially like I said, if you're a younger company and you need the money, it's really nice. So George, what was your other question that you had?
How far back can you go? Like I have a company that's, well, 2 questions. Do you know if California has a state R&D
Yes,
tax?
California, Michigan, Massachusetts. I believe there's only about 10 to 12 states that don't have one right now. All of the major states with major industries, aside from North Carolina, like all the ones that you would expect to have a credit, have a credit.
Yeah.
Massachusetts is a very nice one. California has a very nice one as well. Texas does too. Nevada has one too, honestly.
So I have a client who's in LA and they're in the cosmetics industry and or beauty. And they've been doing like pretty significant R&D for like 10 years. So how far back could they go to apply for these tax
For the
credits?
federal credit, it's a 3-year look back.
3
States
years.
generally don't have a look back period. It's just going to be for the tax years.
Gotcha.
Which is unfortunate. But yeah, for the federal credit, you can look back 3 years, which is nice.
Okay.
And also,
Because this started in 22, if
Yeah.
you're doing back the 3-year look back and it's an amortized, you can write off 20% of 22, 20% of 22, and 20% of 23 in the next year. So after 5 years, you should be back on your full amortization schedule. Is that correct?
Yes, right, Fred?
Because you're taking 20% of each year amortized fully at that point. So after 5 years, it's almost like you're fully valued again.
Yes.
Yeah.
Okay.
So yeah, so if you're like, so that's why we were always like, for the startups, it's rough. But yes, you're absolutely right.
The bonus is the startups have a loss. So a lot of times, what we see when we work with Dave, obviously, they actually can benefit because it is a loss. And even if you're amortizing it, or capitalizing and advertising, you're still at a loss position. So you get the credit and you're still not paying taxes.
Yeah,
Say
it's
that
been a
again,
really
Fred? Sorry.
interesting, it's been a really interesting ride. I mean, when Section 174 first came out, we did have some people panic and call us to say that they were gonna be doing some like creative accounting, which we recommended that they not do. A lot of it was just tax fraud, but thankfully things are starting to calm down. People are figuring out ways to work with it, working with the credits, you know, not panicking and talking to their accountants has been helpful. But yeah, I mean, it's still not great. I'm very, very curious to see if anything changes with this. I mean, there's always been, basically ever since it came into being, there's been talks about having it sunset or changing it, and just Congress has just not been able to get, they haven't been able to get their act together to actually do anything about it. And now with the Chevron decision, I think this is going to open the door to a lot more companies to be able to use this credit, or at least get more leeway in ways that the IRS probably wouldn't have given them before. I would be very, very interested to see some of the court cases that are going to be coming. There's actually if you guys are interested in following that at all, there's a really great R&D tax credit attorney, Holland King. He writes really great pieces on this. He has some really good breakdowns of some of the cases. Really, really interesting work. So yeah, if you guys, I'll share that with you guys later. Holland King is a great guy. He's out in Georgia, but he has some really interesting pieces on the court cases. All right. Anything else for me today, gentlemen?
I'm good.
I'm good.
All right. Guys,
Thank you,
thank you
Laura.
so much for tuning in. Great questions. Also, Fred, thank you so much for jumpstarting my brain. Clearly, I need more coffee. And it was great to talk with all of you. Thank you so much for joining me for Tax Credits for Innovation.